In the last episode, I talked about how to read charts by explaining the basics of charting system. If you are a trader who is trading or investing either in stock market or a cryptocurrency market, this video is for you. Welcome to Katosh Tubes, I'm host Paras, and in today's video, I will explain the part 2 of how to read charts. I will take you through the live demo in which I will take an example of a chart and draw the technical analysis. But before I start the video, if you haven't watched the part 1 of the video on how to read charts, you can always click on the link above or in the description to watch that video. So now, let me get started with today's video. Before I get into the details of the charting system, if you haven't yet subscribed to my channel, well, this is the right time to do so. So in front of me there is a chart. You can see it is Bitcoin and US dollar chart. Now let me remove myself from the screen to take you or to give you the complete view of the screen and the chart and explain the technical analysis side by side. Remember, if you haven't watched the part 1 of the video, you must watch it before going ahead. So now let's begin. So here in front of me you can see the Bitcoin US dollar chart, and before I dig deep into the technicals of understanding this charting system, let me give you a brief overview of Tradingview. So on the left hand side you can see the drawing tools. You can see here these are the trend line, horizontal ray and other stuff that you can draw. This one is again an add-on tools. You have Fibonacci Retracement, which I talked about in the last video, and you have other similar drawing tools. Also on top of it you can see the time frames. You have monthly, you have weekly, and then you have all the other time frames. You can switch on to daily, so this is the daily time frame. You can switch on to hourly, so this one is 4 hour, and likewise. So let me put it to day. So again, this is the candle pattern which you can use. This one is called as a line pattern, which will show these candles into the form of lines, just like this. And then you have something called as bars, which is similar to the candle pattern, but it looks slightly different. This is the open position, this is the close position, and likewise. Something similar to candle which I talked about previously. And this one is a comparative chart. So in this option of the compare option, you can add any other symbol and compare it with the current chart, which is Bitcoin US dollar. Let me show you in brief. That is US USD, and you can see how this particular pair is trending against Bitcoin US dollar. So you can draw the correlation between these two pairs by just doing the comparison. So let me remove it. Okay, let me remove it. Okay, now this is again the most important part where I will add all the indicators, the important indicators that will be used by you to analyze the charts. And after that we have financials. You can leave it for now. You can have template, you can create your own template, especially for the paid version. This one is very beneficial. This is the layout that you can choose 1, 2, 3, 4, 5. So this we will talk about later. It's not the part of this particular video. And next is on the right hand side you have something called as functions. There are a lot of functions here. The most common are these watch list. So you can just click on it and add the pair that you want to analyze. And then secondly, the most common thing that you will be using are alerts. It's your triggers which will tell you when a price hit a certain point. This is for your entry and exit strategy. So again, these two are important. The other ones are like this one is news. So the most common that you will be using are watch list and alerts in this section, and then you will be using the indicators and then some of the drawing tool here. So now let's jump into the charts. Just let me tell you before I start, you can save the layout and also you can change the theme. If you don't like this white theme, you can just turn it into a dark theme. See, just like that you can turn the theme. So I will go with the white one. This suits me. And now let us analyze the chart. So the example I am starting with is a weekly time frame because it's easy to understand. Now the first thing is to add all the indicators there is. So go to indicators. The first one that I add, I call it EMA, that is exponential moving average. Now I am not going to talk about the detail of what is the meaning of EMA. I will talk about the use case, what it shows you. Okay, so let me add moving average exponential. So it is added here. Again I cross it up. So this is the line, that is 9 EMA. So the most common that the traders are using are, first one is 20 EMA, and remember this should be placed as a source as close, the close of the candle, and now keep it okay. So you have one line which is tracking the chart. Now you add another indicators, again that one is EMA, moving average exponential, and let me add two more. So we have two. So now this one is your 20 EMA. Okay, this one is the new one. Again you turn it to 50 EMA. Close is same, style you can change. I want my 50 EMA to look like a red, so I will mark it as red. It is for your own clarity. So this is red, and now the third one which I will mark it is called as 200 EMA. Okay, and color is, I always take it as green. Done. Okay, so these are the EMAs that I use in every chart ranging from monthly, weekly and daily, basically for the all time frames that include hourly chart also. Now let me add another indicators which is helpful, MACD. It is moving average, convergence and divergence. So let me add it. So here, since it is my another account, it is not allowing me to add MACD, but I will show you how it looks like. So let me go back to the paid one which I am using right now and show you. So here you can clearly see the indicators that I have been using. So I've showed you 20 EMA, 50 EMA, and you have 200 EMAs. So this one is 200 EMAs, and just below it you can see MACD, which is moving average, convergence and divergence. It will track when the trend is going to change. So this is very helpful in the long run. Basically for the longer time frames you have weekly and monthly and daily time frames. This one is very helpful in teaching you or telling you when the trend is about to change. Again, below it is called as RSI, which is this. So RSI means relative strength index. So it is the range between this 20 and here on the top of it is 80. So as a rule of thumb for the RSI, if it goes below the 20 level, that means it is a sign of excessive bearishness, and that means bulls are about to come and buy it. If it goes above, it is like vice versa. That means market is extremely bullish and at any time it can go bearish because the bears are waiting to sell or short the particular symbol. So this is about a brief of indicators. There are a lot of indicators that people use. One of the famous is Bollinger Band. So this one is a Bollinger Band. Many traders use it, especially the beginners, but I usually avoid it because it doesn't fit my trading system. So now indicators are almost done. Now let me get to the drawing tools and draw some support and resistance and then make sense of this particular chart. So let me go to this drawing tool, and so for better clarity I turn it into a line or a bar chart that will clearly show me the entry or the open and close of particular days. So using this bar chart will help me create a better trend lines. So let me draw a horizontal line. So as you can see in this chart, at particular point range, which is something here, you can see lot of open and close are there for the candles, for the weekly candles. So I can draw a horizontal trend line, an area which shows me support and resistance area. So go to settings and change it to 10,000. This is one area, and again I mark it a range which I believe should be till here. So this is my support and resistance area. So after drawing the support and resistance lines, you may have a question in your mind, and that is how to be sure that these lines are correct. So the simple answer is check the frequency of open and close which are crossing these lines. If the frequency of open and close candles on a weekly basis, like this is weekly time frame, so this one is for weekly, for the weekly candles, if the frequency is more, that means your line is correct. So as you can clearly see, the open and closing of the candles, of the weekly candles in this particular case, are very frequent for this support and resistance line. You can see case here, case 1, case 2. So you can see the frequency of these lines are very high. If the frequency of the touch points are very high, the open and close, that means you have a valid or a very strong support or resistance line. So that's how you point out that which line is best, which means to draw the best support and resistance line. So let me remove this drawing and move further. So this is the support and resistance area. So in case you are trading and with time you draw these lines, and in some point of time in future this particular trade or this particular candle fall to here, so you are sure that it may bounce back at this particular area, support and resistance area. So that's how you forecast. You forecast by analyzing that if the trade falls here, it will bounce here for some time, then there are high chances of bouncing back and going upwards. So that's how you predict the future of a trade. So this is a small example that I just showed you. Next, I talk about something called as trend line. So trend lines are something which are equivalent to the support and resistance line, but they are not horizontal. So in this case, if I have to draw a particular trend line, I can, let me draw it. Again, at the time of drawing this line, I have to keep in mind the frequency of open and close. The more touch points, the stronger will be the line. So let me see if it makes sense. So in this case, so I can either put it here or put it here. If I put it here, it doesn't make sense, but if I put it here, you can see the touch points on the weekly. So here you can see a particular trend line is all set here. So if in this case, let's say your particular symbol bounces back and it goes up and it hit here. Once it get hit here, there are high chances that it will bounce back because of this trend line analysis that you have just done. Let me expand it for better clarity. So here you can see if this particular symbol Bitcoin US dollar comes back here, there are high chances that it will bounce back. So this area or this trend line will act as a resistance. So that is one way to look at it. And now I will take you through another part which is very important and very interesting. I call it as Fibonacci retracement, which is this. Oops, it's here. Fib retracement. So drawing a Fibonacci retracement is quite simple. All I need to do is touch upon the bottom of the chart, the last candle, recent candle. In this case, this one is the lowest candle, and then move up and point the second point at the top of the candle, the recent highs. Okay, so you can see there is a fib retracement. This means this 0.5 and 0.618 are the strongest Fibonacci retracement areas. Whenever a pair comes to this particular range between 0.5 and 0.618, there are high chances that it will bounce back because it gets measured on the top highs and the bottom lows of the particular symbol. So as you can clearly see, let me zoom it. Once it hit this particular range, the Bitcoin US dollar hit this particular range, you have a support of 50 EMA, which is again acting as a support. You have a support of fib retracement, 0.5 or 50% fib retracement. Again it goes up, then the market is weak. The symbol tried to move around here, but because of the strong support, it has been difficult for this particular symbol to go further lower. And now this time in this month, this one will be the deciding factor whether it will go down more or not. If it breaks this area, definitely it will test this area, and if it breaks further, there are high chances it will go to 200 EMA and test this support before moving down to this support area, which we have drawn earlier. So let me put a drawing here to explain better using the brush. So let's say, okay, keep it this. So let's say it goes or it breaks this support area, it goes here, and because of some support and a strong bearish market, it may bounce back up for a little time and then it goes down. It goes down, it tests the 200 EMA, then it goes to support. It's going to hit the support area, maybe it fluctuates, maybe the bull run is back, and then as you can see, the RSI, the relative strength index, is already at the bottom. That means anytime it can turn into a bull market. Then it may bounce back and it goes back up. So that is one way to look at it. Second way is it goes back down only here and then again bounce back here. So that's how you draw a future prediction or conclusion based on the chart analysis. That's why I call it as technical trading analysis. So now before moving next, let me tell you this 20, 50 and 200 EMA. They are also lines which act as a strong support and resistance. So since they are measured based upon the exponential moving average and based upon the closing of the candle, in this case it's weekly candle. If you draw it on daily chart, it will be daily analysis. So this lines acts as a strong support and resistance area and will tell you where the trade or the symbol is going. So there are a lot of patterns to analyze. You have a death cross, you have golden cross, but that is a different topic to discuss. That's not a scope of this particular video. So before I take you to the another example, let me tell you that analyzing one time frame is not enough. You need to analyze all the time frames. Here it is, and then draw a final conclusion. You can see the weekly fib, how it is acting on daily. Can you see clearly the pattern, the strong support, because what we have observed in the weekly chart? That's how you can draw a relevance, by comparing chart by chart. You can compare or draw your own support and resistance line in daily differently, in weekly differently, by just color coding. Let's say, let me draw a line here, horizontal line. So this is one for daily. So let's say this is the line. So to mark it for daily, I can mark it as blue. So blue color or the blue line of support and resistance will be for daily. Let's say black is for weekly, and likewise you can draw for monthly. Before I take you through the live example, just remember there are a lot of books based on technical trading that I have read. All the links I've shared in the description of the video. So do check them out and get the proper knowledge. You will advance way faster if you are interested in reading and knowing about technical trading. Okay, so that's one part of it. So let me take you through one example, one of my favorite example. It is right here. So I am going to take you through a typical example of US dollar and Indian rupee. So this is a typical example of an uptrend chart. This one is USD INR. You can see it is ranging or going upwards without any stop in between. So this is a typical example of an uptrend when a chart climbs upwards. You can see it's going up, higher high, higher lows, higher high, higher lows. It's just going upwards and never wanting to stop. But again, you can see here a type of consolidation. So this one is a monthly chart that I am analyzing based upon the trading indicators that I used. So let me give you an example of weekly chart, how I am looking at it. So you can see in the weekly chart, the RSI is already in between, so we don't know whether it's going up or down, but for the trend it says it will be going a little bit upwards. But again, according to my analysis, this is old one, it is making a wedge pattern. So there is something called as pattern identification in a technical charts, which is again a different topic to discuss. You have to digest these topics which I have covered before I move into the pattern system. I think I will explain it in the next video if I make it. If you comment below and let me know if you want me to make the pattern videos, I will make it up for you. So according to me, you can see this is the 50 EMA, this is 20 EMA, and this is 200 EMA. So I have drawn a fib retracement here, and as indicated, when it crashes, a little pullback, it rested on this particular EMAs or fib retracement, and once it rests on this fib retracement, it bounced back. So that's how you can see, you can plan a trade around. If I buy here and this is my resistance area, I can clearly gain this much of trade and appreciation value if I bought USD INR at this particular period. So that's how you put a trade, by analyzing or predicting the future of the chart. Of course, there are a lot of things that can be studied, but this is just for the information sake. So before I close, let me give an example of MACD and MACD divergence. I can show you in one chart, and that is Euro INR. So MACD divergence will show you the change in the trend. So this particular chart is in uptrend ever since, but again it's hitting a trend line, a resistance here, and again getting a support, then again going up, breaking it, again hitting the support, trend line support, again bouncing back up, support, and that's how it's going. So according to me, according to my monthly analysis, it is consolidating here, and now when it breaks this trend line, this is the support area, it is going to fall back downwards to this area, and then it will bounce back again. So that is my prediction. Of course, your prediction can be different once you analyze, but why my prediction is strong, why I think it's a valid one, is because you can see a clear MACD divergence. This particular line where it is closing again, and from here let me draw a parallel line, parallel trend line, which is close of this particular candle, and then we go to close of just above this to the candle area. You can see it's close of this. So this is the line. Let me mark it a different color for clarity. Red. Oops, red is not visible. Let it be this color and let it be line. So if you can clearly see, this trend or this MACD is showing a different of divergence, a difference in the range. So according to this, if I compare the close here to here, MACD is going down, and here the line, on the other hand, the trend line is going up. So there is a divergence. That means there are high chances that trend will change. So generally it's going upwards, so there is high chances that it's going to come back, then again go upwards, just like from the historical analysis. That's why you need to analyze the historical pattern of the charts. So this is one way to analyze the chart. I hope I have made you understand this stuff, and let me move to the camera and give my final words. So that's about part 2 of the video on the live demo. I think I have to create a part 3. Let me know your thoughts by commenting in the comment section. I'll see you next week with a new video and a new content. Till then, take care and have a good day.